let me also take you through what's been happening in the world of commodities. Let's start by looking at what crude oil is up to. Crude oil futures rose more than 2% yesterday as analysts see summer fuel demand pushing the market into a supply deficit in the coming weeks. Now, Goldman Sachs analysts have said that Brent should rise to $86 per barrel in the third quarter as summer transportation and cooling demand pushes the market into a sizable deficit of 1.3 million barrels per day. Now, the WTI July contract is at $77.7 a barrel, up $2.2 or almost 3%. And on a year-to-date basis, US oil has gained 8.5% as well. Brent August contract at $81 a barrel, up almost $2 a barrel or 2.5%. And year-to-date, the global benchmark is ahead 6%. But while these are futures of the months going ahead, let's also take a look at what the spot basis is doing. And WTI at 77.8, Brent at 81.7. So good moves coming in on both of these indices, WTI as well as Brent crude. Now remember, oil prices posted a loss last week after the OPEC Plus agreed to increase production from October through September 2025. Now this Goldman sees a $75 floor for Brent as lower prices promote demand and a $90 ceiling due to higher than expected global inventories and the OPEC Plus production decision. Traders are looking ahead to oil market reports from the OPEC and the International Energy Agency, which is the IEA, today and tomorrow as well. So that's all that's been happening on the oil front. Let's switch focus and talk about what gold is doing, because gold prices have also rebounded yesterday after the precious metal's biggest daily drop in 3.5 years in the last session as investors awaited US inflation data and the Fed Reserve's decision on interest rates tomorrow. Spot gold was up 0.7% at $2,326.2 per ounce. So that's where gold is doing. So well, yes, in a nutshell, that is what oil and gold are up to, Shansi.
Well, absolutely, Snehi. So over 3% declines were the move that we saw yesterday for gold. So quite the important move coming in there. But let's get tracking the top stories this morning, why don't we? And the key announcements and launches from Apple's Worldwide Developers Conference. A significant event for the company as Apple amps up its presence in the artificial intelligence circuit with Apple Intelligence that prioritizes practical features enhancing user experience. Now, among other key announcements was of course the next generation operating system for Vision Pro OS 2 4 months after it first launched Vision OS. Vision Pro will also be available in China, Japan and Singapore. And the biggest release this year, the iOS 18, in addition to wallpapers, icons, widgets, as well as users will also now be able to arrange apps and widgets to frame their wallpapers better. Finally, the Apple iPad gets the much awaited calculator app as well. So a lot of important moves coming in there.
Absolutely. Let's keep it with Apple then, because after months of speculation, Apple has finally revealed that it's integrating ChatGPT access into its devices, the likes of iOS 18, iPad OS 18 and Mac OS Sequoia, allowing users to access its expertise, its image and document understanding capabilities and more without needing to jump between these two tools. Now, the company has categorically said that privacy protections are built in when accessing ChatGPT within Siri and writing tools. Users will have the choice whether to use ChatGPT in its apps or not. In a reaction to the announcement, Elon Musk has threatened to ban iPhones from all of his companies. In a series of posts on X, he wrote that if Apple integrates OpenAI at the OS level, Apple devices would be banned from his businesses and visitors would have to check their Apple devices at the door where they'll be stored in a Faraday cage.
Well, that is an important announcement coming in there, but shifting focus to some important commentary from the central banks. ECB interest rates are not on a linear downwards path and policymakers could at times wait more than one meeting before cutting them again. And that's the word coming in from the central bank President Christine Lagarde. Remember, last week ECB cut rates from a record high but held off committing to any more policy easing given stubbornly high wage growth and yet another increase in inflation projections. Now, markets are pricing in little more than one rate cut over the 4 meetings left this year and also see between 3 and 4 reductions through the end of 2025, so in the next 12 policy meetings.
Alright, interesting commentary coming over there. Let's keep it going with central banks because according to the New York Fed Reserve survey, the US public's outlook on the future path of inflation was mixed in the month of May. The report shows that the public believes inflation a year from now will be at 3.2% compared with April's expectation of 3.3%, while 3 years from now it is expected to be held steady at 2.8%. 5 years from now, the survey respondents see inflation at 3% from April's projected 2.8%. The report comes just ahead of the start of this week's FOMC outcome, wherein officials are expected to keep borrowing rates unchanged between 5.25 and 5.5%.
If you like this video, then like, share and subscribe to ET Now.